Good morning, you're watching Market Cafe with me Snehi Shah and with me is Lisa D'Souza and you're watching ET Now. Now this is a show where we take you through all the important global stories that you need to be tracking, all the movement in the global markets as well as the stocks that you should be tracking for our markets and what brokerages are also keeping on their radar this morning. So with that, let's kickstart the show then, and Lisa, take us through what the global markets did. What was the movement like in the US and the European markets?
Well, after seeing a strong July, it was a lackluster day actually for the Wall Street because the US market, the Dow Jones, though it ended with a positive bias, it was still flat, while the Nasdaq and S&P 500 they closed down lower. Stock futures also fell as the Fitch it downgraded the US rating, and this comes after 2 months after the US government it narrowly escaped the debt default obligation. This is also because Fitch has cited fiscal deterioration over the next 3 years. Now, what does this mean for the Asian markets? It means that the risk aversion flows that may be limited. It will mean lower flows to the equities in the emerging markets like Asia. So we have to keep a watch on this too. Earnings are coming in pretty good. We had earnings coming in from. We have earnings coming in from CVS Health, Yum Brands, as well as Humana, Siemens. They will be reporting their earnings today. Uber shares, they reported a fall, and that was because though they reported the first operating profit, but Lyft's pricing that eclipsed its first operating profit. But most of the earnings, around 82% of the earnings that have beaten estimates. But we have to keep a watch on the levels of dollar index too, because since mid-July it has gained 2.3%. So we have to keep, because that may overshadow and that may act as a headwind to the outperformance of the stock performance. Also, we have the July ADP jobs data which will be out, and economists they are expecting a 1,75,000 increase, which is lower than the 4,97,000 rise in the prior month. Now, shifting focus on the European markets, they closed lower as the Eurozone manufacturing that slumped. The index, it fell to 42.7 in July from June's 43.4 level, and that's the lowest level since May 2020. It's actually during COVID times. Manufacturing activity that fell in July, and it was at its fastest pace. The HSBC shares, talking about the results, that was up after results beats, and even BMW, it raised their margin guidance to between 9 to 10.5% from 8 to 10% previously. So that was on the US as well as the European market. But Snehi, what about the crude? It seems that the oil market, they are ballooning, after the crude inventory data is out. So what it's talking about?
Absolutely, Lisa. So initially, oil prices edged lower on a stronger dollar and signs of profit taking after a rally in July when investors bet on tighter global supplies and demand growth in the second half of 2023. But we've also seen oil prices ballooning on largest single week crude inventory crash in years, because crude oil inventories in the US have fallen sizably this week by 15.4 million barrels versus a draw of 9 lakh barrels earlier. Now, the dollar index also, keep in mind, is a measure of the greenback against 6 major currencies. Now, this has risen by 0.4%, and a stronger dollar makes crude more expensive for investors holding other currencies. So this is why crude prices have also been seeing an uptick. And on the supply side also, this Friday we have the OPEC Plus meeting happening, and that is expected to see Saudi Arabia roll its voluntary cuts through September, further tightening supply. So with an uptick in demand coming in, supply is being tightened. This could only mean that crude prices, we can expect to see a further uptick coming. Let's look at what crude is doing right now. Brent has held to that $85 per barrel mark, currently at 85.8. So a little north of that $85 mark. On the other hand, you've also got WTI crude holding on to those 82 levels, north of 82 levels. So yeah, you're seeing an uptick coming in oil, and with all these factors concerning demand and supply, let's see how that pans out for oil, Lisa.
Well, and we'll also look at what other events to keep a watch on. On the corporate action front, we have Sheela Foam that will be considering raising its funds via QIP and the lock-in on Mankind opening that ends today, and it will represent around 2% of the equity. Also, Pharma, it will be trading rights, X rights today, and on the earnings front, we have Nifty earnings, Titan that will be reporting their earnings, and other earnings we have HPCL, Sheela Foam, Adani Wilmar, VIP Industries that will be reporting their earnings today. So keep a watch on this.
Absolutely, and let's move on to some global stories then. In the latest cues that we are tracking for you this morning, Fitch has gone ahead and downgraded US's credit rating following concerns over the state of finances and its debt burden. Fitch said it has noted a steady deterioration in governance over the last 20 years. In a reaction to the downgrade, Treasury Secretary Janet Yellen has termed the move arbitrary, citing that the report was based on outdated data from 2018 to 2020.
And the US job openings that fell to the lowest level in more than 2 years. The figures could thereby spur the Federal Reserve to keep the interest rates elevated for quite some time. The job openings fell 34,000 to 9.582 million in June. Meanwhile, the layoffs also declined 19,000. The report also suggested that workers are growing less confident in the labor market, with resignations plunging by the most since April 2020.
And another heavy cloud for ex-US President Donald Trump, who has now been criminally charged over efforts to overturn his 2020 election defeat. He is accused of 4 counts, including conspiracy to defraud the US, tampering with a witness, and conspiracy against the rights of citizens. Trump, who is running for president, again denies wrongdoing. Do remember, he has already been charged in 2 other cases, which is mishandling of classified files and falsifying business records to cover up a hush money payment to an adult film actress.
And in some positive news from the tech world, Uber posted its second quarter earnings. The cab-hailing platform, they generated a gross profit of $394 million, but missed the revenue expectations. And this is Uber's first recorded profits as a public company. The company expects its profit to rise further on the back of working crowd returning to offices.
And keeping it with global earnings then, AMD top line declined 18%, still topping estimates for sales and profits. Meanwhile, Starbucks also reported a beat on their Q2 results. The company reaffirmed its fiscal 2023 outlook, projecting a revenue growth of 10 to 12%. They have also gone ahead and raised their adjusted EPS, which is earnings per share growth outlook, to 16 to 17% from the lower end of the 15 to 20% band.
And amid an ongoing shortage of the ADHD drug Adderall, pharma regulators in the US are now urging manufacturers to step up the production. The nationwide shortage that was seen from October last year. Now, according to the latest letter from the heads of the regulatory agencies, manufacturers have been called upon to confirm if they are working to increase the production to meet their allotted quota amount.
And Xiaomi is betting big on festive season and upcoming Cricket World Cup to boost sales. That's the exclusive word coming in from the company's India president, Murali Krishnan B. In this exclusive conversation with ET Now, he talks to Sumita Karir about correct price strategy, premiumization, and the company's plan to double down on localization. Listen in to what he had to say.
While Xiaomi started as an online-focused brand, we pursued an offline growth strategy ever since 2017. And it's come a long way. Today, let's say the online-offline channel split in terms of sales for us is roughly 50-50%. But if I take a step back, the offline market contributes to almost 60% of the total smartphone market. Yes. So that's one point to consider. Number 2, while we have a much stronger position, we are the market leaders in the online channel. We are not the market leaders in the offline channel, right? Offline is a larger proportion of the market and we're not the market leaders. And if I put 2 and 2 together, it just shows me that we have significantly higher upside for growth in the offline retail channel. And hence, that's one of our priorities that we picked up for this year.
All right. So what is the kind of demand outlook that you're looking at with respect to the festive season and, of course, for the overall year, the second half of this year?
To put it in very simple terms, we are viewing H2 with pragmatic positivity. right? Pragmatic because it has been a challenging, let's say, last 6 quarters for the smartphone industry, and everybody is waiting with fingers crossed for demand to start shaping up. And we're seeing enough green shoots there, and that's where the positivity comes in. One, 5G networks are rolling out, and this creates an opportunity for people to buy new devices, number one. Number two, devices like what we launched with the Redmi 12 5G at that sort of a killer pricing, again, creates a reason for people, especially in the mass market segment, to adopt 5G. Number two. Number three, you have the festive season coming up, you have the Cricket World Cup coming up, enough reasons for people to indulge and either buy a new smartphone, upgrade the smartphone, or buy a second device, and hence we are pragmatically positive. Fingers crossed, things are shaping up well. I'm sure it can get much better.
The Indian government has been pretty, bullish about electronics exports, mobile phone exports, which actually crossed $10 billion in FY23. And Xiaomi has been building in India since 2015. How are you building on that strategy?
Look, we'll continue to double down on localization. This is stuff that we have already disclosed in the past. Today, 100% of the phones and 100% of the televisions we sell in India are proudly made in India, but we don't stop there. We continue to focus on broadening and deepening the local component ecosystem, and we are aspiring to increase our domestic value addition, especially for smartphones, by a whopping 50% over the next couple of years, and that's just on the smartphones. There are similar aggressive plans to localize the components, not just for smartphones, but also for televisions, as well as sourcing our AIoT products locally, like what you've seen today. The Redmi Sonic Base wireless earphone 2 is a made-in-India wireless earphone.
And AI-powered e-commerce accelerator Assiduous has aimed for a 600 million in gross merchandise value in 2023. My colleague Anurag has caught up with the founder and CEO Somdatta Singh to understand the way for the business.
That's an amazing question. You know, I hear that all the time. It all began when I was just 15 years old, right? I was just a student in my college where I started doing part-time work to be able to support my education. I'm a first-generation entrepreneur. I come from a family of doctors, and in Bengal, not all Bengalis actually end up becoming entrepreneurs. Very quickly, it's my third venture. What I started doing as a side hustle when I was just 15 became a full-time venture when I was 22. To then till now, I've built and sold 2 companies, and this is my third, and it's going very well. I always say that the beauty of entrepreneurship is you're constantly learning. So I started with an ad tech company, exited that, then went on to building my own D2C brands, and now building a cross-border e-commerce accelerator to help brands go global without them having to worry about distribution and supply chain.
All right, with that, let's quickly slip into a very short break. But on the other side, we'll see what the Asian markets are doing this morning. Be right back.
Welcome back to the show. And as August kicks off, the automakers across the country have begun to report their sales for the month of July. Bajaj Auto, they reported a 10% decline in sales on year-on-year basis. Meanwhile, flood-like situations are affecting on-ground activities for escorts. Srishti Sharma joining in with more details on this. Over to you, Srishti.
Well, it was a bumpy ride for the auto sales company when it comes to the July sales data, because what we have seen that no significant performance or no significant jump across the segments for the month of July. Firstly, let's talk about the passenger vehicle segment. Then therein we see that the numbers were largely in line to the 18 hours estimate, where the companies continue to cater to their pending order books from the likes of Maruti, though you will see a jump of 14% on a month-on-month basis, but that's coming on a low base. From M&M, we have seen a 6% growth on a month-on-month basis for the automotive division, while Tata Motors sales were almost flattish. Coming to the commercial vehicle segment, like we were highlighting, that we are expecting a marginal decline on a month-on-month basis on the back of a seasonally weak month, and that's what we are seeing onto the numbers. While Ashok Leyland numbers were better than what we were expecting at ET, now moving above that 15,000 mark. Tata Motors numbers were in line, but a disappointment coming in from Eicher Motors VECV, which recorded just almost 5,877 units for the month gone by. From the two-wheeler segment, on one hand, we have seen not a great set from Bajaj Auto. The exports were almost flat, but TVS Motors, the numbers largely were in line, but exports have jumped 12% on a month-on-month basis. But when it comes to Eicher Motors Royal Enfield, then the numbers were expected at 76,500 units, but the company clocked in just 73,117 units. So a bit of a disappointment on that front as well. And lastly, from the tractor division, we were expecting a high double-digit decline, and that's what we are seeing onto the number front, where the companies are hopeful that from September onward, that as the festivity kicks in, they are hoping for the sales to recover. So these are the auto sales data for the month of July.
All right, Shrishti, thanks for that quick snapshot on July auto sales numbers. But let's move on then. And the Enforcement Directorate knocks at two-wheeler maker Hero Motors' doors, visiting two of the company's office premises in the national capital, along with the residence of Executive Chairman Pawan Munjal. My colleague Sumit Chaturvedi joins in with the latest developments on this story. Sumit, take it away.
Enforcement Directorate officials today raided residences of Pawan Munjal, Executive Chairman of Hero MotoCorp, and two offices of Hero Moto in Gurugram and Delhi. The case is linked to one of the aides of Pawan Munjal being caught with unaccounted cash, after which a case against Pawan Munjal was registered in PMLA, which is Prevention of Money Laundering Act. Taking cognizance of that, today the raids happened at these premises. Also, this is not the first time the trouble has come knocking the doors of Pawan Munjal. Earlier in June, Minister of Corporate Affairs had started investigation into affairs of Hero MotoCorp after there were alleged overbookings and there were alleged over entries in the books of Hero Moto worth about 1,000 crore rupees. Then Ministry of Corporate Affairs had started investigation in public interest against the company. The trouble started when earlier this year there were raids at residences of Pawan Munjal and offices of Hero MotoCorp when there were allegations of income tax evasion. After that, the troubles continued, and today we have seen the ED continuing its raids against Pawan Munjal and Hero MotoCorp, that is the largest maker of two-wheelers in the world.
And the Finance Ministry of India has released GST collection numbers of July. The gross GST revenue of 1,65,000 crore rupees has been collected, and this also marked a record 11% growth on year-on-year basis. Well, to know more about this, Prakash is joining here with us.
The government has collected more than rupees 1,65,000 crore GST revenues in the month of July. Finance Ministry has come out with the details of GST collection numbers for the month of July, which says the GST collection numbers have registered 11% growth on year-on-year basis. Out of rupees 1.65 lakh crore, rupees 29,700 crore collected on account of CGST. When it comes to SGST, collection is at rupees 37,600 crore. Whereas amount collected for IGST, it is at 85,930 crore. So it's been fifth time since inception of GST that the GST collection numbers have crossed rupees 1.6 lakh crore. When it comes to domestic transaction, as per the details, revenues from domestic transactions are 15% higher on year-on-year basis. So it's a positive development for the government as GST collection numbers are growing steadily, and it's a reflection of GST Council's decision as well. GST Council has taken several steps to improve compliance and has taken several steps to plug in tax evasion.
All right, thanks Prakash for those details. And we also spoke with M. Govinda Rao, the former member of the 14th Finance Commission, as well as Garima Kapoor, Chief Economist at Elara Capital, on the GST numbers. Listen in to what they had to say.
Expansion in the tax base is the most important thing. Broaden the base, lower the rate, have a simple and transparent tax system. This is what we all say. So bringing in any gaming is online or offline. Gaming is an important step in broadening the base. I would say that there are many more items that have to be brought into the tax base. So much worried about the industry because this is not an industry which is a meritorious industry. This is an industry for basically gaming, and then obviously there is nothing that, that nothing meritorious about this.
Seeing there's a disconnect between what the GST Council is taking decisions and the ministry is probably overseeing the online gaming, I should say, industry. Clearly, the definition is going to hurt the industry. We've seen a number of industry representatives, after the decision was taken, come out and open and say that this will probably kill the nascent industry and it should not be taxed at that particular rate.
And now let's go across to an ET Now exclusive. We have learned from the sources that GST Council in its next meeting, that is today, they will be deciding the framework for 28% GST on the full face value on online gaming. My colleague Prakash, he's joining us with this exclusive.
The GST Council is going to hold an important meeting today through video conferencing. And prime agenda for the GST Council is to decide framework to levy 28% GST on full face value in the context of online gaming. As you are aware that in its last meeting, GST Council had decided to charge 28% GST on full face value on all category of online gaming, but it has not given clarity as to how 28% GST on full face value would be determined. Whether it will be based on entry level or every bit, that is something where the GST Council is expected to come out with proper clarity. We are also given to understand that the GST Council may approve a wider definition of online gaming. A new definition of online money gaming may be included under online gaming category, and deposit of money by a player including digital assets and tokens can be considered as online money gaming. As per the proposal, there should be no distinction between game of skill and game of chance while deciding online money gaming. Moving ahead, when it comes to the issue that is with regard to overseas online gaming apps and platforms, a very pertinent issue that is there before GST Council for its consideration. Sources are informing that the GST Council may make it mandatory for online gaming platforms to register in the country, and they'll be brought in under ambit of GST and treated at par with domestic online gaming platforms. So these are the important agenda before GST Council for its discussion and approval.
All right, thanks Prakash for all those details. Let's move on then. And IDBI Bank has moved NCLT against NCLT's order rejecting insolvency of Z Entertainment. My colleague Ankur Mishra is joining in with more details on this. Ankur, take it away.
Yes, the trouble for Z Entertainment seems to continue as IDBI Bank has filed a fresh petition against NCLT's order in NCLT. Now, this is important because NCLT had earlier rejected the insolvency proceedings petition against Z Entertainment, and now the lender wants to initiate the insolvency proceedings once against Z Entertainment, and therefore, against the order which was passed on May 19th, now IDBI Bank has moved NCLT Delhi, which is Higher Court of Appellate Tribunal, and it needs to be seen whether or not this petition gets admitted against the entertainment. Now, this is also important because NCLT Mumbai has already reserved the order which was there on merger of Z and Sony. And since that order is pending, in between a fresh petition has been filed against the NCLT order, and it will be interesting to see, even after NCLT's order comes on the Sony merger, what happens to the fate of the entertainment.
And with that, let's slip into a short break. More news and updates on the domestic front coming in next, so stay tuned on the channel.
Good morning and thanks for staying tuned to Market Cafe. Let's look at some domestic earnings then. And Interglobe Aviation, or Indigo as it is commonly known, is all set to release its Q1 earnings today, and it is expected to be a strong quarter. Now let's see if the numbers actually take off for Indigo. Samit is here to tell us what we can expect from the numbers and also the key factors that we should be watching out when it comes to Indigo's numbers. Samit.
Well, the June-ended quarter is expected to be one of the blockbuster one for India's largest airline, that is Indigo. Revenues are expected to be higher by nearly 30% compared to last quarter. EBITDA adjusting for forex loss is expected to be higher by around 85% to close to 4,600 crore rupees. Margins are expected to come in at close to 29%, while the net profit is expected to see a jump of nearly 2.5 times to close to 2,322 crore rupees. Now, this expected net profit number of 2,300 is actually higher than the highest ever annual net profit reported by the company in FY18 of close to 2,240 crore rupees. So this gives you a sense of how good the first quarter of FY24 is expected to be for Indigo. Now, why the company is expected to report a blockbuster quarter? While it will be on the back of higher air traffic, higher yields which measure the average fare per passenger per kilometer, higher passenger load factor which is the capacity utilization, while lower oil prices and stable INR would help Indigo to report such a good quarter, good numbers. Now, if you see the average daily air traffic stood at higher by around 2%, passenger load factors improved by around 600 basis points, yields which measure the average fare were up by around 6% in the first quarter of FY24, while oil prices, which is one of the biggest cost expense for an airline company, was down by around 21% compared to the previous quarter. However, do remember that the first quarter numbers were very strong, but the same positive trends have turned negative in the second quarter, and that's the one of the most important thing to watch out for from the management commentary, and that is how much of this first quarter numbers can be extrapolated going forward is something that investors would be watching out for. Along with this, what are the current trends in the domestic and the international segment? What is the any commentary coming in from the compensations from OEM related to grounding of aircraft? What is the guidance on yield environment for FY24? What is the impact of higher yields on demand, and how are they benefiting from Go First shutdown would be important to track from Indigo conference call.
Well, thank you, Somit, for sharing the expectations on Indigo and also the key commentary to keep a watch on blockbuster quarter coming in for Indigo. So keep a watch on Indigo. But Nifty constituent Titan is set to report their Q1 numbers. And what is the street expecting? Will it be a glittering quarter one for Titan? Vinny is here to break down the numbers for us.
That we're expecting from Titan, we have a fair idea of what to expect because of the Q1 operational update. So revenue growth, we're expecting it around 19% coming in for the company. Revenue is expected at 10,684 crores. Profits seeing a jump up of around 14%, while margins, we're expecting them to be almost flattish, slight bit of a decline in terms of margins, contraction there. 12.5% is what we're expecting the margins versus 12.9%. Now revenue growth, obviously what's leading the revenue growth, because there was Akshaya Tritiya as well as the wedding season that was there in May and June. So that was something that is supporting the revenue growth of the company. Margins contraction coming in there because of the gold price volatility that we've seen coming in, and jewelry business, which accounts for around 80% of their revenues over there. We're expecting that according to the Q1 update, it's expected to see a growth of around 21%, and EBIT margins for jewelry business is expected to see a decline coming in, mainly because they had a one-off in the base quarter due to some inventory gain. So because of that, we are expecting that jewelry EBIT margin to decline over there. Now in terms of other segments, eye care division expected to see a growth of 10%. Fragrances and fashion accessories expected to see a growth of 11% as well. Watches wearable, a 13% growth over there as well. And what is exciting, that we're expecting a good growth coming in from these new growth engines, that's wearables, Tenera, as well as CaratLane, which will be expected to see a good growth. Let's watch out for the commentary in terms of the demand outlook for the company, product mix of the company, started ratio, how is that shaping up, while sustainable volume growth, what's the outlook on that front, is something that we're keeping an eye out on.
All right, thanks Vinny for all those details. We will be keeping an eye out on Titan today. But other than Indigo and Titan, what are the other stocks that you should be keeping on your radar this morning? Ansh is joining us in the studios today to tell us exactly about that. Ansh, take it away.
Sure. So Power Grid will be the first stock in focus for today's trading session, as board has approved 85 megawatt solar power project in Madhya Pradesh, the cost of which is around 554 crore, and implementation schedule is expected to be 10 months. G Power will also be in focus, as company has won an order from Gujarat State Electricity Corporation for 444 crore. Let's have a look over a few earnings that came in post-market yesterday. Thermex revenue is up by 17%. Also, the order book has gone up by 11%. EBITDA margin also seems to have improved by 100 basis points to 6.8% versus 5.8% a year back. Cholamandalam's investment PAT is up by 26%. We can give some credit to the business AUM, which is up by 40%. Also to disbursement, which is up by 50%. Sansera's revenue is up by 24%, EBITDA up by 26%, and PAT up by 28%. Redington's revenue is up by 26% on year-on-year basis. However, the net profit has dropped by 21%, and this is mainly because the expenses has increased by around 27%. Lastly, Dalmia Bharat Sugar's revenue is down by 9%, but because inventories has come down drastically by over 60%, they have managed to make net profit, which is up by 13% on year-on-year basis.
Well, thank you, Ansh, for giving us all those details. But now let's see what's on the brokerage radar for today. We have Ankita joining us. Ankita, do share with us what's the views coming in from Morgan Stanley as well as CLSA.
That's correct, Lisa. Good morning to everyone. There is some brokerage notes coming in from Morgan Stanley and CLSA. First up, there is a note on Canfin Homes by Morgan Stanley, and they are maintaining an overweight with a target price of 1,000 rupees per share. But understandably so, because it could take some time before the investors could regain confidence. But Morgan Stanley is drawing comfort from Canfin Homes' consistently high ROE over the years, and they have cut the forecast, but the medium-term view and the price target has remained unchanged. Now, the view this as an isolated incident and not changing the medium-term view on the stock, and on the back of that, they are maintaining an overweight on the particular counter. Next up is Chola Invest. Now, CLSA has downgraded the stock to outperform from buy and hiked the target price to 1,125, 250 rupees per share from 1,070 rupees per share. Now, according to them, they see a strong medium-term growth outlook, but that will be perhaps driven by the new businesses. They feel that the NIMs have contracted like peers, while the asset quality has remained stable. They see good business for the company, but the valuations, they don't leave much room for the upside, and on the back of that, they have actually downgraded the stock to outperform. Next up is Escorts. So CLSA has maintained a sell and hiked the target price to 2,002 rupees per share from 1,658 rupees per share. Now, according to them, the margins have improved across the business segments. They see the tractor industry growth could surprise in FY24, and they see construction equipment demand to be very strong, and on the back of that, they have maintained a sell and hiked the target price for Escorts. And finally, we have Power Grid. CLSA has maintained an outperform on the counter with a target price of 270 rupees per share. And according to them, the backlog is down 6% on a year-on-year basis on the lack of TBCB awards and pipeline picking up. Now, according to them, for Q1, the capitalization is up 20% on a year-on-year basis, but the capex has been pretty flat. Now, they maintain an outperform rating as markets slow, but the dividends for the company continue to grow, and on the back of that, CLSA has maintained an outperform on Power Grid. So those were the brokerage notes coming in this morning.
All right, thanks Ankita for all those details. We will be tracking these stocks in trade today for sure. But let's also take a look at some of the con call takeaways that are coming. And you've got Escorts, Kubota, Nosil and PVR Inox. They're going to be in focus today on the back of their con call takeaways. Sharad is here to tell us all about the highlights of these takeaways. Sharad.
Well, yes, in focus we'll be having first Escorts, Kubota, and over there for the domestic business itself, the company has stated they're expecting a low to mid-single digit growth for FY24. Apart from this, they have also stated that if the raw material costs, they start moderating, they will be sticking to the EBITDA margin guidance. And for the railway segment, it's expected that this should be a double-digit growth coming in FY24 with the order book roughly at almost 1,000 crore rupees. Apart from this, also the company is expecting the volumes to pick up in the second half of this fiscal. The second company which would be in focus would be Nosil, and a very positive commentary coming in, and despite the chemical stocks actually correcting in the recent time, and they have guided that the second quarter volumes will be better or at the same levels of the Q1 levels. And also they have stated that the European Union tire manufacturers, most of them are still facing headwinds. However, there is a positive commentary coming in as there's the pricing that might normalize in the second half if the China's domestic demand that improves, and of course the debottling of existing units, and that is expected to actually increase the capacity constraints by almost 5 to 10%. Now, of course, for PVR and Inox, if you look at it, they're expecting the ad revenues to pick up from the third quarter onwards, especially because of the higher festive season bookings. And also recovery has been seen in the second quarter, especially from June, because of the big ticket releases coming in from the Hollywood. Now, of course, they plan for FY24 to add, and they maintain the guidance of almost 150 to 160 odd screens. So, a strong positive commentary coming from certain names, as well as a bit cautious updates also coming.
Well, thank you, Sharad, for sharing us all the con call takeaways. Do keep a watch on these stocks. But now we have come to the end of this show. It's a goodbye from me and Snehi. So keep a watch on the next show, the market. Lot of power packs action lined up. So So stay tuned on the channel. Goodbye and thank you for watching.